Well, let's bring in Rob Morgan, Chief Investment Officer at Sethi. Rob, you heard Kayla's update. Are you optimistic? Is this a time that investors out there should be putting more money into the market, given the run-up that we've seen on some of this trade optimism?
Well, Dom, certainly the news is encouraging, but as you and Kayla just pointed out, there's some pretty big differences that remain, particularly in that intellectual property area. So I am investing a little more cautiously. I'm advising clients to invest a little more cautiously, and certainly we can get into the specifics of that. But I'm not ready to declare the trade war over quite yet.
All right, so let's get into those specifics then. Where exactly are you seeing the ability to put more money to work in this kind of a market, given the fact that we've already seen a sharp run-up in prices?
Well, I would definitely endorse clients putting money more into the small cap growth area versus the large cap value area, primarily because the large caps tend to be multinationals. They could be buffeted if there are some disappointments in the trade talks and there's more trade friction. Obviously, the small cap arena tends to operate more domestically, and it's not impacted quite as much as the large cap multinationals are. So that's certainly one area of discussion that I'd be looking at. The other one, just for U.S. investors in general, I would be underweighting the international sector. I wouldn't be avoiding it altogether, but certainly if trade frictions continue, and I don't, as I said, I don't think this trade war is over yet. So I think we will see some more bumps in the road related to trade as we go forward. So those are really a couple of areas strictly related to trade that I would be doing right now.
Those bumps on the road with regard to trade, Rob, could provide for a rockier market, yet we are not seeing that today. The volatility index continues to languish. Nobody thinks that we have anything bad coming up in the marketplace. So where exactly are the caution signs? Where exactly would you be a little bit more worried outside of the idea that we could possibly get a negative trade headline here or there?
Well, and certainly trade is a big area where some negative surprises could happen. I think another area to look at is continuing to watch the Fed. It seemed like from the last meeting that the market's interpretation of what happened at the last Fed meeting is that the Fed is just as likely to cut rates as raise rates. I mean, they're now saying that they're data dependent. But, and a bunch of Fed governors are at the Chicago Booth Monetary Forum today, and who knows what they'll say. But they have been hinting that hey, markets, there is still an upward bias to rates here. So, I think that would be a real jolt if the Fed basically at some point this year continued with the rate hike campaign. I mean, ostensibly, they're supposed to raise rates twice this year, once next year. And I think that if they actually continued with that would certainly jolt the markets a little bit as well.
There's a big debate playing out right now about whether or not there is a marked and noteworthy slowdown in the global economy. We are seeing specific examples in places in Asia, specific examples in Europe, especially in Germany. So where do you stand on this? Should we fear, from a market standpoint, the slowdown that we are seeing in places like Europe, Asia, and perhaps even in the U.S. in some capacity?
Well, you bring up a good point. Even some of the recent U.S. data that maybe isn't watched quite as closely as things like the jobs report, leading indicators, some of the housing numbers, some of the retail sales numbers have been showing some softening. And so I think it does bear watching, certainly. But at the same time, I'm of the camp, or in the camp, that I wouldn't think that a recession is right on the horizon. I think that we're just seeing slowing growth, and maybe market watchers will start talking about a soft landing. But I don't see a recession on the horizon.
All right, so a little bit more constructive. Rob Morgan, thank you very much for joining us this morning.